The AI market shakeup. Best AI ETFs for your portfolio. Last week, the entire market took a significant hit following shocking news from China. Reports suggested that China had found a way to train its AI models at a much lower cost than what's currently being done in the United States. This sent shockwaves across the global markets, leading to a massive sell-off, particularly in the semiconductor and chipmaker industries. Major companies such as NVIDIA, Broadcom, and Micron were deeply affected, causing a steep decline in the AI sector. Given how volatile the AI market is, picking individual stocks can be quite risky. This is why investing in AI-focused ETFs, exchange-traded funds, can provide more stability while still allowing exposure to the high-growth potential of AI. When this market drop occurred, I turned to one of my favorite stock screeners, investing.com. I used their Warren AI tool, which functions like ChatGPT, but specifically for analyzing stocks in ETFs. After running a search, it suggested several top-performing AI ETFs, including AIQ, ARKW, and IRBO, along with solid reasoning behind each choice. RKW has shown the strongest one-year performance at 69.7%. AIQ leads in 3-year returns at 53.4% and 5-year returns at 122.8%. RKW is ideal for active investors seeking aggressive growth. AIQ appeals to those who prefer a more diversified and passive approach. IRBO has the lowest fee but comes with limited performance data. The key takeaway from this analysis is that the best AI ETF depends on your investment goals, risk tolerance, time horizon, and fee sensitivity. There is no one-size-fits-all approach. What works for someone else may not necessarily fit into your portfolio. With that in mind, I've compiled a list of 6 AI ETFs to consider. Let's dive in. AIQ, Global X Artificial Intelligence and Technology. ETF is a well-diversified AI-focused ETF that provides exposure to a broad range of companies involved in artificial intelligence and technological advancements. It aims to capture the growth potential of AI across various industries rather than concentrating solely on semiconductor manufacturers. Key features and benefits. Balanced sector exposure. While information technology remains the dominant sector, AIQ also holds positions in consumer discretionary and communication services. This diversification helps mitigate risk and ensures that the ETF benefits from AI adoption across different industries. Strong top holdings. The fund includes major AI-driven companies such as Netflix, Meta, and Salesforce, all of which have been heavily investing in artificial intelligence to enhance their platforms, improve automation, and increase operational efficiency. The inclusion of these industry giants ensures that investors gain exposure to AI development in entertainment, social media, and cloud-based enterprise solutions. High potential for growth. The ETF has demonstrated strong performance, with a 24.6% return over the past year and an average annual return of 17% over the past 5 years. Given the continuous advancements in AI, this growth trajectory is expected to continue, making AIQ an attractive long-term investment. Reasonable diversification. Unlike some AI ETFs that are overly concentrated in a few major stocks, such as NVIDIA or Microsoft, AIQ maintains a more balanced weighting across its holdings. This reduces concentration risk and makes the ETF a more stable option for investors looking to gain exposure to AI without relying too heavily on a single company's performance. Expense ratio consideration. With an expense ratio of 0.68%, AIQ is slightly more expensive compared to broader market ETFs, but this is fairly standard for specialized AI sector funds. Investors should weigh this cost against the potential for higher returns. Current price and accessibility. Priced at around $40 per share, AIQ remains an accessible investment option for both retail and institutional investors looking to add AI exposure to their portfolios. Why choose AIQ? If you're looking for an AI-focused ETF that balances high growth potential, sector diversification, and reduced concentration risk, AIQ is a strong contender. It allows investors to tap into the growing AI market while maintaining exposure to multiple industries that are leveraging AI for future advancements. QTUM Defiance Quantum ETF. As artificial intelligence, AI, continues to advance, the need for more powerful computing capabilities grows. Traditional computing methods are reaching their limits in processing massive datasets and running complex simulations. This is where quantum computing steps in, providing the computational power AI needs to achieve new levels of efficiency and speed. QTUM Defiance. Quantum ETF offers targeted exposure to companies leading the quantum computing revolution, making it a strategic investment for those looking ahead to the future of AI-driven innovation. Key features and benefits. Focus on quantum computing leaders. QTUM provides direct exposure to D-Wave Quantum, IonQ, and Rigetti Computing, companies at the forefront of quantum computing development. These firms are working on revolutionary technologies that could redefine AI's capabilities, making them crucial players in the next generation of computing. Expense ratio advantage. With an expense ratio of 0.4%, QTUM offers relatively lower fees compared to other AI and tech-focused ETFs. This makes it a cost-effective option for investors seeking exposure to high-growth technologies. Strong recent performance. Over the last year, QTUM has surged by 46.23%, demonstrating significant momentum. While past performance doesn't guarantee future results, this upward trend highlights increasing investor interest in quantum computing as a game-changing technology. Relatively young but promising fund. Since its inception in 2018, QTUM has been steadily gaining traction among investors who recognize the potential of quantum computing. Though it's still a relatively young fund, it has already positioned itself as a leader in this niche sector. Why choose QTUM? If you're an investor looking for exposure to next-generation computing power, QTUM is a compelling choice. By focusing on companies at the cutting edge of quantum computing, it provides an opportunity to invest in the future backbone of AI and technological innovation. As AI-driven industries demand more powerful processing capabilities, quantum computing could be the key to unlocking the full potential of artificial intelligence. 3. IETC, iShares U.S. Tech Independence ETF. This ETF is broader than the typical AI-focused funds, but still heavily invested in AI-driven technology. What makes IETC stand out is its diverse mix of AI-related companies, along with a low expense ratio compared to others in this category. Expense ratio, only 0.08%, making it significantly cheaper than most AI ETFs. Performance of last 5 years, up 155%. Last 1 year, up 30%. Top holdings includes Palo Alto Networks, Accenture, Oracle, and ServiceNow. Unlike many AI ETFs that focus mainly on hardware, IETC emphasizes software and services, providing better diversification within the tech industry. 4.SXQ-PHLX Semiconductor Sector Index ETF. If you want pure exposure to AI semiconductor companies but at a lower cost than popular funds like SMH, SXQ is a great alternative. Top holdings Broadcom, NVIDIA, AMD, Marvell Technology, TSMC, and ASML. Expense ratio, only 0.10%, much lower than SMH's 0.35%. Performance of last 5 years, up 52.83%. Last 1 year, up 11.65%, impacted by recent market fluctuations. Since semiconductors are essential for AI development, investing in this sector is a must. Instead of trying to pick a single winner, an ETF like SXQ spreads the risk across multiple leading companies. Yet, QQQM, Invesco Nasdaq Esto ETF. For broad-based exposure to AI growth while maintaining stability, QQQM is an excellent choice. Expense ratio, 0.15%, affordable given its exposure to leading AI-driven companies. Performance, historically outperforms the S&P 500. Top holdings includes tech giants like Microsoft, Apple, Google, Amazon, and NVIDIA. This ETF isn't exclusively AI-focused but provides exposure to AI-driven companies while diversifying across multiple sectors, reducing volatility. 6. SCG, Schwab U.S. Large Cap Growth ETF. Another broad-based growth ETF with strong AI exposure is SCG. Expense ratio, just 0.04%, one of the lowest among AI-related ETFs. Performance consistently beats the broader market with steady, long-term growth. Top holdings, similar to QQQM, but with a slightly different weighting strategy. If you're looking for long-term AI exposure with less risk than sector-specific ETFs, SCG is a smart choice. Which AI ETF is best for you? The safest way to invest in AI is through broad-based ETFs like QQQM or SCG, which provide exposure to AI-driven growth without excessive risk. However, if you're looking for higher returns and are willing to accept more volatility, sector-specific ETFs like AIQ, SXQ, or QTUM may be a better fit. Just because an ETF is popular doesn't mean it's the right choice for your portfolio. Always consider your investment goals, risk tolerance, and time horizon before making a decision. Which AI ETF are you investing in? Let me know in the comments. Also, if you want to keep learning about ETFs and investing strategies, check out my in-depth video here.